The following special event is brought to you by Ash Brokerage, the practice enhancement company.
Welcome to Steve Savant's 4th annual tribute to Halloween entitled The Coroner. We'll perform autopsies on unplaced cases from the files of the declined, the postponed, and the heavily rated. Our expose on life insurance underwriting to usher in the substandard season. And throughout the week, we'll be giving away our underwriting guide of the top 10 commonly seen conditions. And on today's show, why understanding the basics of underwriting can help you place more cases. Part 1 of this week's series on impaired risk underwriting. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician and Innsmark. Let's get down to business. Over half of all Americans own life insurance are in the wrong rate class and overpaying for coverage. Now's the time to secure a second opinion. Well, we're talking about the basics of underwriting, kind of give you an introduction, and I want to really show you basic ideas behind it, and one of it is indemnification. Indemnification is the art of protecting against economic loss. Most people have family members, they have business associates, and they have charitable institutions that would suffer economic loss if they had died. Now, I want to look at a few points to talk about the considerations or purposes of life insurance. I'm using Backroom Technician's general purposes for life insurance. Some of those general purposes are creating an estate, paying death taxes and other estate settlement costs, funding a business transfer, paying off a home mortgage, or having a business protect itself against the loss of a key employee. It can replace a charitable gift and can also pay off business loans. Another area that I want to go to is they can also be used for college funding and supplemental retirement. But another area that we don't look at very often, and it's really a big one, is the human value. Remember, most underwriters are going to look at 15 times or 20 times income. So what we're going to try to do is project how much human value on the earnability or their earning power that each person that we're trying to underwrite has. So I go through this basic list. I can calculate that. I need their current annual income, their annual rate of income increase, their fringe benefit percentages. I need the number of years until they retire. I need uncompensated work at home. I need to look at personal consumption each month, the income tax rate, usually the effective income tax rate, and then the inflation rate that I'm going to use, and an assumed investment rate of return. Once I go through that, I can pretty much calculate what the human value is going to be so that I can do a very good job of looking at my entire indemnification need, not just for the basics of indebtedness or future obligations or even in charitable intent, but to add this to it as well. Now, what I want to do is walk through a basic idea of when you're looking at company retention. Life insurance companies have different levels of company exposure. Each level can help mitigate liabilities. The first level of exposure is called a company's retention. It's their ability to take on an exposure or a liability by themselves. So they're big enough, or they're large enough, or their reserves are great enough to take on that kind of exposure. But sometimes a company needs to go out and get help in reinsurance, and they'll use what's called automatics or auto bind. And they may go up, let's say a company has a $500,000 retention, but they have $2 million through auto bind. So they can actually bind their contracts up to $2 million. The reinsurance treaties, they all agree on by protocols and what they'll accept and requirements. And so they all have to buy into the pool, the reinsurance pool's different procedures and protocols of underwriting. And that helps spread the risk, but also you share in the profits. So you're not only sharing the risk, but you're sharing the profits. And then facultative, sometimes you just say, I need to go out because I'm not getting the best underwriting within my pool. I go outside to facultative. The good part about facultative is many of the times facultative may be able to deliver a better offer. But the problem is it also could give you an offer that really isn't as good as you had in your original offer through your auto reinsurance. So you have to be really careful about this because, in my view, if they come back with a new table rating that's higher than what you originally got through auto bind, then you're going to have to be stuck with that, and the only way to do it is to start the case completely over. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate their agent population as they once did. But now you can have a quick synopsis of the top 10 commonly seen conditions at your fingertips, so you can illustrate a reasonable rate class for your prospects. just email me for your copy of the top 10 commonly seen conditions at steve.savant@ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. We're talking about the basics of underwriting, and when we do, we have to look at a couple of things that we've been looking at as we've been walking through this. In this case, we're looking at the underwriting classifications that are segmented into two areas: standard and above for non-smokers and tobacco users. We have so many levels. We have super preferred, preferred plus, preferred, standard plus, and standard non-smoking, all non-rated. And we also have non-cigarette tobacco, like cigars, snuff, chew. We have preferred smokers, we have standard smokers. So we're really adding so many layers because we're really parsing the HDL, we're parsing blood pressure, height and weight. We're looking at all the exam material and we're really parsing it depending upon the client's condition. Now, when we're looking at this, we're looking at basic ideas like table ratings. It could be age rated up. It could be flat extras, temporary and permanent. Table ratings can go all the way up. Some carriers are still carrying 16 tables to their ratings. And some people use age rated up. Oddly enough, if your client was age 70 and then, let's say they had a diabetic condition, they were technically, by the mortality timeline, they were actually age 77. So they wouldn't rate the client, they would just move his age from age 70 to age 77. And then a lot of carriers will use flat extras. Most of the time temporary. There are people that use flat extras for permanent because it works better with the illustration and actually could, in some configurations, bring the premium down. So I'm looking at flat extras, temporary. I see temporary a lot in cancer because we're just coming out of maybe breast cancer or colon cancer, and there's been some time now and the chemo's worked well and they've been clear and their PSAs are really well. So good. So that temporary flat could go off maybe 3 years, 5 years, depending upon how the underwriter looks at that kind of idea. Well, let's look at some of these ratings because I think you'll find some of the table ratings here are really exciting. I'm using EBIX's Vital Quote comparisons, and you'll notice here in my comparison, I've blocked out super preferred non-smoker, regular preferred non-smoker, and then the last column combines whether the carrier actually extends standard plus or standard. It's really interesting to note that when you look at a graph like this, and these are some major players in the term and perm market, and look at the difference between the first place premium and looking at down the top 10. There could be a swing of anywhere between 10 to 15, sometimes 20% spread. So it's really important to pick the right product, and part of picking the right product is where do I think my client's going to lay out. Now, we're talking about impaired risk, but much of the time in the fourth quarter, we're looking at contracts like this where we're trying to figure out, hey, what about my healthy client? Could my healthy client get a really, really good offer? And I'll need to know a lot of the specs. Again, we'll look at the entire Chem 24 exam that does the blood and the urine analysis and see if we can parse those numbers and they fall within really good normal ranges. I might be able to get super preferred or preferred plus or preferred non-smoker, and even standard plus can come into play because some of our impaired risk underwriters actually use the preferred plus pricing, which is cheaper than the regular standard. Now, the reason I show you this is just to give you an idea. Here's what you're looking at, and to me, this is a really excellent tool using EBIX's system here on Vital Quote comparison to compare the players, look at the different classifications, and to see if you can really measure, does the client have a better position by actually qualifying in the exam and what that premium is going to be, because I like to kind of get an idea before I go to the quote. Another contract that I want to show you is here's our regular standard tobacco non-cigarette or preferred smoker and our preferred plus smoker and our standard smoker. So they have, for tobacco, that could maybe only be maybe cigar, maybe it could be chew or snuff or Nicorette gum. So we're looking at these numbers for that, and then if I'm looking at a preferred non-smoker, and even though it sounds like a conflict of interest or a conflict of terms, a preferred non-smoker could be a person who, except for cigarettes, is in pretty good shape in every other arena. And then looking at the standard plus smoker, which is, again, a new category in the last couple of years that we've added onto the classifications, and then standard smoker, you can get an idea with these four categories which one is your client going to actually qualify for. And remember, we have so many carriers in this where you look at this and you'll be able to look at the chart and get an idea where those premiums are going to fall by the players and who's most benevolent when it comes to tobacco. But what if I have to put on a rating? And this is kind of an interesting idea. I'm looking at a table B, male 50, I'm using a non-smoker rate, and I'm looking at the different table ratings that come in here, and some of these really price out better because the standard plus rating is included in this, and it really moves the premium up the actual top 10 in table B for a male 50 non-smoker. And so I'm going to be looking at these numbers, who has the standard plus and who has the standard table B. And remember, even though the standard plus may actually look like a better number, I have to find out, will the client really qualify? Because everybody's procedures and protocols are different. So when I'm doing a bookend quote where I'm trying to say, here's where I think it could be, and then here's where it could be in case we don't really get good underwriting, I kind of need to know, do I have the premium tolerance to be able to write a check for that? Remember, over half of all Americans who own life insurance are in the wrong rate class and overpaying for coverage. Now's the time to secure a second opinion. Well, that's all the time we have for today. Remember, before moving forward with any of the ideas on our show, always consult your tax advisor, legal counsel, or your broker-dealer compliance officer. Missed an episode? Just go out to our video archives. And remember, you could be wiser as an educated advisor. I'm Steve Savant. We'll see you tomorrow. Today was part 1 of our 5-part series on life insurance underwriting. To order your free copy of the top 10 commonly seen conditions, just go to downtobusiness.ashbrokerage.com. And remember, over half of all Americans who own life insurance are in the wrong rate class and overpaying for coverage. Now is the time to secure a second opinion with the largest in-house underwriting staff in the brokerage community. Don't forget to follow me on Twitter, Facebook, LinkedIn, or just email me at steve.savant@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. Happy Halloween, everyone.